Welcome to Take the Lead Radio with Dr. Diane Hamilton, where she interviews some of the most successful leaders, entrepreneurs, authors, speakers, and other individuals who will inspire you to take the lead in your career and personal life. And now, here is Dr. Diane Hamilton.
I am here with Sam Henderson, who's the CEO and Senior Financial Advisor at Henderson Maxwell. He's also known as Sam the Money Man. He hosts Foxtel Sky News Business, Your Money, Your Call Retirement, and Financial Guru on Tens the Project. He's the author of the One-Page Financial Plan. He's a regular columnist for Financial Review's Smart Money and Money Magazine. And when he isn't doing all of that, he's a public speaker and presenter on all things financial. So it's so nice to have you here, Sam.
Good morning, Diane. It's a great pleasure to be joining you here.
Well, you're actually here in Arizona, right?
I'm here in Arizona. I'm doing a bit of a conference with a group of entrepreneurs, learning how to be a better entrepreneur, I suppose, and just sharpening my skills.
Well, you're here with Joe Polish's group, and I've gone to those events. They're amazing, right? Are you at the Genius Network event? Not this time.
I am. I'm at the Genius X event, which is a group of probably about 25 of Joe's group, and they are the most inspirational group that I've met in quite some time, and it's absolutely worth the effort from flying from Sydney, Australia over to the beautiful Arizona that I'm learning so much about over the last few days.
It is nice here. I haven't been to Australia, but it's on my list. I don't know if I can handle that airplane ride. It's pretty brutal, huh?
It is a long way. I'm not going to lie to you. It's a long way from Australia. It's about 13 and a half hours to LA, and then obviously about an hour and a half from LA to here. So it's a fair hike, but it's absolutely worth it.
Well, you have your own shows that you do, and I've seen a lot of interviews, I think I think it'd be interesting to hear your perspective of the financial issues in Australia versus what we see here. Because I was watching all your shows and everything's superannuation. I'm like, what, we don't have, what is this? So
superannuation is all about retirement. So it's very similar to 401k. It has its own laws. It has its own legislation. And of course, there's case studies around all of those sorts of things. So really what I'm answering people's questions is, I suppose it's just a matter of putting them at ease about their retirement and giving them a much greater insight into their retirement. Most people don't know how much they need to retire. They don't know how much they need to accumulate during their working life and how much to put aside as they're earning their income in their working life. And quite honestly, the situation in Australia is exactly the same as the situation in the US. The biggest difference between Australia and the US is the population. Everything else is pretty similar. So the average retirement in Australia, the average person's probably drawing down somewhere around about $40,000 to $45,000 a year. And to accumulate that sort of income, they need a lump sum of somewhere around about $600,000 to $800,000. Now, the market I move in is probably a little bit bigger. The average client is probably over $1 million. But you do typically find that with financial planners because they're the sorts of clients that are seeking advice. They probably have a little bit more insight, a bit more education, and a much greater buy-in to their retirement and a much greater understanding of the retirement system. So that's what I do on a commercial level, but in my media, it's really about answering questions that everyone has. And the key to that is education. And I think that's what bridges the divide between those people that have money and those people that don't. It's all about educating yourself about how to lower your taxes and how to build your retirement lump sum.
Well, this is the time of year everybody wants to know about lowering their taxes. So is it too late because the year's almost over?
You know what? It's never too late. It's never too late to educate yourself. And I've written 3 books. They're probably not relevant over here in the US, but a book only costs you $30. You don't have to go and pay a financial planner several $1,000s a year. You don't have to even pay $30 for a book. Most what we found in Australia, and no doubt it's the same here, is that most people educate themselves from the media. Now, that can be for the better or for the worse. If you're turning on CNBC every day and you're listening and trying to react to everything you're seeing on TV, there's a reason why they call it the Cartoon Business Network, because there's just so much information. And a lot of that's about entertainment as well. So I would encourage your listeners to educate themselves about the 401ks and any other ways that they can reduce their tax and boost their retirement income.
I interviewed Ken Fisher. He's the genius behind Fisher Investments here. And I was reading one of his books, and he was saying that, if you follow the news, that you're too late. Like, all the factors are built in already of what's going to be good for stocks or not for stocks. Already you're too late. Do you agree with that?
I completely agree with that. And that's why we call it the Cartoon Business Network, I suppose. And no offense to CNBC, but I work for a very similar organization in Sydney, Australia, and we call it Sky News Business. And you are literally reacting to the news that's already happening. So you're never going to keep up to pace with it. All you're going to do is get confused by more information. People need to set their retirement portfolios around having an asset allocation and making sure that asset allocation is going to see them through the good times and the bad. And I'm not talking about financially, I'm talking about mentally. It's up here. You've got to have a certain amount.
Crash,
You're going to be an emotional mess. I mean, you only have to understand Warren Buffett's theory of Mr. Market, who is an emotional mess, and depending on whether he's optimistic or pessimistic is going to depend on how he reacts in the day. Now, who wants to spend their retirement sitting in front of a computer monitoring what's happening on the share market? You should be out there playing golf or bowling or traveling. And that's, having spent a lot of time on the American highways, that's what a lot of people are doing, and good luck to them. I see them driving their RVs around, and they're towing their little cars to behind their RVs. But they're the wealthy Americans. They're the ones that can afford a gigantic RV and the car to pull behind it. Your average American probably can't do that. The average balance in a 401k is about $19,000. It's quite low.
Wow.
Now, that's just the average. That means they've probably got multiple accounts, or the average person is not putting away for their retirement. Interestingly enough, I was just looking at the average salaries in America, which is about $75,000 a year. And that's exactly the same as what it is back home in Australia.
Interesting.
The US dollar's worth a little bit more here, of course, but the range is probably, and people always like to know what averages are. The average range for income is probably around about $47,000 to about $120,000 in the combined households. So most combined households on average have about $117,000 income in the US. Now that's a pretty good living. But thing people don't realize is that if you're going to retire on that amount, you're going to have to be saving around about 15 to 20% of what you earn. That's the hard part when the cost of living has been rising for a long time.
Yeah, and a lot of, I'm sure you have the same thing in Australia with the boomers wanting to retire, can't retire. I think I saw one of your videos, the men just got to over 80, and they're going to live over 80 now in Australia. And so everybody's living longer. And,
that's right.
It's just, I think it's just very challenging for people to know what to do with their money. And then, even if you set up your 401k to take out 15% and you're doing, the maximum every year, you watch these stock market, take huge lumps out. You think you've got somewhere, and then you got stock year. Is it best to be in the stock market? I mean, I've seen so many people. It seems like everybody that's so wealthy is in real estate. What do you think? Yeah,
it's a really interesting one, isn't it? Sometimes the issue, depending on where you buy real estate, of course, but to answer the ultimate question, it's about diversification. But the average person can't necessarily diversify because they probably don't have enough money to diversify. Whereas wealthy people, they've got high incomes to support a
Mhm.
portfolio of assets, be it shares, be it property,
Right.
cash, bonds, fixed interest, etc. So what we try to encourage our clients to do is to have a portfolio that is diversified and that also relates directly to your risk profile or your attitude towards risk and your partner's attitude towards risk, because your partner has often a different attitude towards risk than you might. And we see that every day in, day out. They're always either arguing or discussing or debating how much access or how much exposure they should have to cash and fixed interest or defensive assets versus growth assets. On an entrepreneurial level, I certainly think property is one of the best wealth builders because you can borrow somebody else's money, you can leverage that, and then you can have somebody else repay that debt. Through the tenant. So the tenant repays the debt that you've got on your home loan. Now, that's a fantastic idea, particularly when interest rates are so low or have been so low. They're moving
Right.
now for
Mhm.
the first time in 10 years over here, and we'll probably see 3 or 4 interest rate rises here. And this is one of the biggest challenges that the share market has, is when we see a major paradigm shift like we're seeing at the moment. The first time in 10 years, we're seeing interest rates start to rise in the US. And that's having an effect on the bond market. That's therefore having an effect on the Dow Jones and on the S&P 500, which has had, the Dow Jones was up 30% this year. And 2 weeks ago, it dropped 10% in a week. Now, that sends shockwaves through retirees if they have too much exposure to the share market. So I suppose our job as a good financial advisor is to try to encourage people to diversify their investments and make sure they can ride out the ups and downs of the share market, and importantly, without too much stress.
You know, I agree. With the diversification, I used to be a loan officer and I worked in subprime.
Right.
I did all kinds of financial. I have a real estate license. I know a little bit about a lot of things, just enough to be dangerous. And so we did see a lot of people get really hurt from subprime loans because we expected the market to stay a certain way, and it doesn't.
Yeah.
How do you be proactive to know what's the next thing I mean, you know, like Ken Fisher says, it's already happened in the news. So how do you know how do you be proactive?
Well, you have to educate yourself. And if you want to manage your own money, and I suppose this is the big debate, do you manage your own money or do you get a professional to manage it for you?
Mm-hmm.
I think you're better off getting a professional to manage it for you in most cases, because unless you want to follow the share market and educate yourself on the property market and educate yourself on the bond market, there's no way you can possibly know and understand how things are going to progress in any of the markets. And then you get tempted, something straight out of left field might happen called Bitcoin, and you think, hey, let's get on the Bitcoin thing. It hits 19,000, and then the next week it's sitting at $8,000. So, you know, you've got to be careful. You can't be impulsive, and you've got to take a long-term view. So if you're not sure, if it's not your level of expertise, get a professional to do it. Find a good RIA or someone like that that's local, that's recommended by family, someone that's already tried and true to your loved and trusted community is someone that you need to look for.
Well, you mentioned Bitcoin, and I had Wolfgang Kester was on my show, and he's an expert in cryptocurrency and different types of currency. And it's such a hot topic with everybody. And like you said, it's very volatile. But he was saying that all these countries are going to start having their own currency. Do you think that Australia or the US will have their own cryptocurrency this year?
Yeah, listen, it's a great question. I don't think it'll happen this year simply because there needs to be so much regulation. There's a lot of issues with Bitcoin which are holding it back, I suppose, from becoming mainstream. For example, you can't use it everywhere. It's not like the US dollar. You can literally use the US dollar just about anywhere in the world. Anyone will accept it. It's the world's strongest currency and it's ubiquitous. Yet crypto has not gone to that level yet. Not only that, is it's completely unregulated. It's significantly open to hacking, and we've seen that occur in a number of areas already. So it's not necessarily secure. It's not it's obviously not widely recognized, but it's still too complex. And until it's regulated, until it's more ubiquitous, like the US dollar, it's a long way from being used. So I don't think it's going to happen this year, but I think it will happen at some time in the future. And whether it's Bitcoin or Ethereum or something else, I don't know what it's going to look like, but I can guarantee one thing: the government's going to have its hand in its pocket, and it's unlikely to be Bitcoin.
Yeah. So if the government does come up with their own currency, cryptocurrency like that, what happens to the Bitcoins of the world?
Well, effectively, they'll disappear because they're not liquid. Immediately as in now, well, immediately as if the government comes out and says, hey, we've developed our own crypto, I would say they'll be wiped off the planet immediately. I'd say Bitcoin, Ethereum, whatever, they'll be wiped off the planet immediately. I mean, it's like it's like having the US dollar versus the Thai baht. No one's going to use the Thai baht here in America. No one, or in Australia. So it just won't be used. So I think on a practical level, all of these things, I mean, we're in new territory here. All of these things need to be tested. But it comes down to liquidity. A currency needs to be liquid. It needs to be utilized. And then we need the systems to be able to facilitate that on an average day. Now, this little thing in my hand here, the iPhone or the Galaxy, whatever it might be, that's probably going to be our wallet. Well, it already is our wallet of the future. So we've still got to move it onto that platform.
You know, it is so fascinating to see what's going to happen, and just to look at some of these cryptocurrencies. And I just, how do you advise somebody who's thinking of getting into cryptocurrency? First of all, how to get out of it. I mean, I hear so many people tell me, they made all this money. I go, well, where is it? They go, well, I have to get it out. And then you say, well, can you get it out? And most of them can't get it out. I mean, how do you get it out? Is it a hard thing to do?
Do you know what, Diane? During the back in 2007, during the subprime crisis, most people couldn't explain what a subprime loan was. They couldn't understand how they were packaged up into a CDO. They couldn't understand how they were resold, and they couldn't understand the entire process of how and why the financial system fell over. Now, those people that are buying cryptocurrency, the majority of them probably can't understand what it actually is. They can't understand blockchain and how it operates, and even explaining to your friends what it is. So if you can't understand it, if you can't explain it, don't buy it, because it's not liquid, it's expensive to exchange, it's unregulated, it's open to being hacked on a regular basis, and we're seeing stories all the time. Some countries are either banning it or trying to regulate it, South Korea, Japan, etc., and that's had huge levels, or created huge levels of fluctuations. So if you're thinking about investing into this thing, unless you have millions and millions of dollars, and you might put, say, 2 to 5% aside for playing with, then don't touch this thing, seriously, because it's too unknown. It's too difficult to understand. So don't put your money in it. Put your money in things that you can understand.
The whole mystery behind the guy that started it, and where is he? And he started talking to the people about what he's done, and then he disappeared. And is that really an individual? I mean, have they proven this? I mean, is this guy ever going to come to light? Is it really you?
I'm not sure, but it would make the greatest Disney story of all time, wouldn't it? This guy's going to be like the sleeping prince that gets kicked awake or something. I don't know, but it's a fantastical story. So I have no idea. I have as much as an idea as anybody else. It is fascinating. It's definitely entertaining, and it's riveting. It's like a Hollywood story. It's great.
It is. It is. You know, there's another thing I think is interesting to talk about as we're talking about the things not to do. I have a lot of classes. I teach a lot of business courses still, and we do a lot of case studies. And of course, Enron comes up a lot as an example of what I think is a great example, unfortunate example of don't invest your retirement account, all your money in the company for which you work, because if they
Yeah.
crash, not only do you lose your job, but you lose your retirement. Do you agree
Yeah.
with how much?
Entirely,
Yeah.
entirely. And a lot of those companies in the past have had their pension schemes backed by the actual company themselves. And that's one of the difficulties that we have when a company falls over, because it's only as good as the company behind it. But it also goes towards the theory of diversification, making sure that you've got a number of different assets in a number of different asset classes. So cash, bonds, shares, international shares. I mean, America is not the only market in the world.
Right.
And the beauty of things like ETFs, I mean, we use ETFs extensively in Australia now. And in America, ETFs are seeing huge inflows from what we call managed funds, or what do you call managed funds here?
Mutual funds.
Mutual funds.
Mm-hmm.
So we're seeing a huge movement out of mutual funds that tend to be too expensive into ETFs that are easy to trade. They're generally quite liquid, and you can buy just about any market. And the beauty of that is that the average Ma and Pa can go and buy these things and gain diversity in their portfolios quite easily.
You know, you had mentioned a statistic earlier of how low the percentage is that people, or the amount of money people have in their 401k. Now, do you happen to look at the group over 50 or over 60 to see how much they had, or was that from like 18 to, you know what I mean? It could be different.
I didn't break it down, but I can tell you in Australia versus America, it's going to be pretty similar. So in Australia, the average in what we call a superannuation account, or similar to a 401k, is about $77,000. Let's call it $80,000. But by retirement, for a man, that's around about 320,000. But for a woman, it's about 45% lower. So women tend to have time out of the workforce. They tend to make up a large portion of the part-time workforce. So they don't have the capacity or the propensity to save as much for retirement. Now, those people that have probably divorced, I'm not sure exactly how it works in the US, but in Australia, the retirement pool makes up the asset pool for divorce. But those that divorced 10 or 15 years ago, the women have a lot less than the men, because those divorce laws only came about in the 2000s. So we are seeing this massive disparity between men and women of around about 50% of retirement savings. Wow. So it's important to help your wife and help your partner to boost their retirement savings and spread the love. You know, that's what we're teaching people over in Australia, and hopefully in the US, the same thing's happening.
Yeah. I don't know if they're doing a lot of love spreading in that area here, but I like the idea of it. And I think that you offer some really interesting advice. And I want to look at more of your videos, because you really have an interesting show, and all the things you do are fascinating. Tell me a little about your book real quick before we have to go, because of I got to end the show a little earlier today. But
yeah, no, you're right. Well, it's called the one-page financial plan, and the idea is to try to make financial planning as easy as possible, because if anyone goes and talks to a financial planner, and you're not an expert in financial planning, of course, it can be a very confusing conversation. It's full of jargon, acronyms, and confusing discussions around money that most people don't even want to have. I mean, a lot of people in Australia and in the US are so confused by money that they prefer to stick their head in the sand and either ignore it or not deal with it head on. So I would encourage you to go and find a financial advisor you can work with, or go and educate yourself by buying a book. Go and buy anyone's book, whether it's mine or someone else's. I mean, someone else's is probably going to be more relevant to the US, but there's so many financial planners that have written books. So find out the best ones. I mean, Tony Robbins has got a book on wealth. Go and read that. Robert Kiyosaki's books, Rich Dad, Poor Dad, Cash Flow Quadrant, if you're running a business. I mean, these books are 20 years old now. Well, the Rich Dad, Poor Dad books, but they are some of the best books ever written on money. And there's so many good books on business as well. And, you know, I deal a lot with small business and entrepreneurs, and they need to educate themselves on how to manage their money as well, because unlike a lot of companies, they don't have retirement plans that are set up for them. They have to do it themselves. So we've got to make sure that they're well equipped, and the best way to be well equipped is through education.
Well, I agree. And I'm glad you brought up the Rich Dad, Poor Dad, because I had Sharon Lechter on my show, and she was great, and she was part of that series. And it has been a very successful series here. And I know you're very successful in Australia, and it's so nice of you to join us here in Arizona and across the United States with the show. And I really enjoy that. How can people find out more about your show?
Well, I'm on hendersonmaxwell.com.au. The AU is Australia, so that's hendersonmaxwell.com.au if you want to find out a little bit about me. If anyone's ever in Australia, by all means, drop me a line. I'm always over here. I was skiing over here a few weeks ago. I'm back here for another conference, and I'm heading back over to San Diego. But Diane, thank you so much for having me on your wonderful show. It's a great honor and a great pleasure.
Oh, well, you're welcome. I'm heading to San Diego soon, too. Maybe we'll run into each other there.
We'll see you over there. I'm over there for the Traffic and Conversion Summit and Social Media Marketing World, so it should be a bit of fun.